For young Americans in 2025 trying to buy a home in Miami, isn't just hard. It's the real estate equivalent of trying to swim to Cuba with a backpack full of bricks while the tide is against you. Because while Miami has always been a high-demand, high-cost city thanks to its tropical climate, ocean views, and cultural vibrancy, in recent years it has transformed into a housing market so inflated that it now ranks among the least affordable in the entire United States. And for young adults, it might as well have a no-entry sign hanging over it. Median home prices in Miami-Dade County have surged well past $600,000 for single-family homes. And even condos, once the affordable urban option, often list in the $400,000 to $500,000 range, meaning that with mortgage rates hovering around 6.8 to 7%, a buyer putting just 10 to 20% down can expect monthly payments, including taxes and insurance, to push well over $4,000, far beyond what most young professionals can reasonably afford. This is before factoring in Miami's notoriously high property taxes and one of the most punishing homeowners insurance markets in the country, where premiums have skyrocketed due to hurricane risk, flooding, and the overall instability of Florida's insurance industry. In many cases, insurance alone can add $8,000 to $12,000 a year to housing costs. For a young adult earning Miami's median household income of roughly $75,000, and let us be honest, many earn significantly less. These numbers simply don't compute. To afford the median home without being cost-burdened, you'd need to earn well into six figures, which puts homeownership in Miami out of reach for the majority of younger buyers, unless they have substantial outside help from family wealth, a high-earning partner, or a windfall of some kind. One of the biggest drivers of this affordability crisis is investor activity, both domestic and international. Miami's allure isn't just for people who want to live there. It's a global trophy market attracting wealthy buyers from Latin America, Europe, Canada, and the Northeast, who pay cash often sight unseen for properties they use as vacation homes, status symbols, or pure investment plays. Add to that the institutional investors and private equity firms, who have moved aggressively into Miami real estate, snapping up single-family homes, small multifamily buildings, and condos to rent out at premium prices. And you've got a market where first-time buyers, especially young ones, are routinely outbid before they can even book a showing. This competition pushes prices up further, fuels bidding wars, and reduces the already scarce inventory of starter homes. The supply problem is compounded by the fact that Miami's developable land is limited. Wedged between the Atlantic Ocean and the Everglades, the city has little room to sprawl outward. So the only way to add significant new housing is to build up, which Miami has done with a vengeance in the form of high-rise luxury condos that cater primarily to wealthy buyers, not to locals looking for affordable housing. These towers often come with astronomical homeowners association fees, further pricing them out of reach for young buyers, and many aren't even occupied full-time, as they're purchased by absentee owners. The few new developments targeting middle-income buyers tend to sell out before construction is finished, and even then, middle income in Miami often means households earning $120,000 or more, well above what most young locals bring in. And that's assuming you can get a mortgage approved, which for many young buyers is another major hurdle thanks to student loan debt, credit score requirements, and lenders growing more cautious amid economic uncertainty. Meanwhile, rents in Miami have exploded over the past several years, making it nearly impossible for would-be buyers to save for a down payment. The median rent for a one-bedroom apartment hovers around $2,600 to $2,800, and two bedrooms often exceed $3,200, prices that rival those in New York and San Francisco. For young people just starting their careers, this means that even if they're disciplined enough to save a little each month, the amount they can realistically put toward a down payment grows painfully slowly, while home prices continue to climb or hold steady at high levels. This creates a vicious cycle. You rent because you can't buy, but high rent prevents you from ever saving enough to buy. And if you're hoping for relief from declining prices, don't hold your breath. While Miami's market has cooled slightly from its pandemic-era frenzy, demand remains strong enough and inventory tight enough that significant price drops are unlikely in the near future. Adding to the challenge is the fact that Miami's economy, while diverse, is heavily tilted toward industries like hospitality, tourism, and service work that often don't pay wages high enough to support homeownership at current prices. Even in white-collar professions, salaries in Miami lag behind those in other major metros with comparable housing costs. A young professional making $80,000 in Miami might sound well paid, but when you stack that against a $4,000 monthly housing cost, it becomes clear why so many are struggling to break into the market. This wage-price mismatch means that Miami's housing market functions almost as a separate ecosystem from the local labor market, sustained largely by outside money rather than by the incomes of people who actually live and work there full-time. Climate risk adds yet another layer of complexity for young buyers. Miami is ground zero for sea level rise, flooding, and hurricane threats, and while these risks haven't yet deterred high-end buyers in significant numbers, they have driven up insurance costs and led some lenders to impose stricter requirements in flood-prone areas. For young buyers, this means not only higher monthly costs, but also the risk that their investment could lose value faster than in less vulnerable markets if climate impacts accelerate. It also means that even if they can afford to buy now, the long-term financial stability of that investment is far from guaranteed. A sobering thought for anyone considering taking on a 30-year mortgage. Generational comparisons make the current situation all the more frustrating. Older Miami residents who bought decades ago often paid a fraction of today's prices, locking in low mortgage payments and building significant equity over time. Many of them are now sitting on homes worth 5 or 6 times what they paid, with property taxes capped by Florida's Save Our Homes Amendment, making it financially attractive to stay put. Younger buyers, by contrast, face record high entry costs and no such protections, creating a generational wealth gap that grows wider every year. It's not uncommon for young Miamians to live with parents well into their 30s, not because they lack ambition, but because it is the only way to save enough to even consider buying in the city where they grew up. Government programs and policy solutions have so far done little to bridge this gap. While there are some local initiatives aimed at increasing affordable housing stock and offering down payment assistance, they're often underfunded, highly competitive, and come with income caps that exclude many middle-class young professionals who still can't afford market-rate homes. Zoning changes that could allow for more multifamily and missing middle housing have been slow to take effect, hampered by political resistance and concerns about changing neighborhood character. In the meantime, the market continues to tilt toward luxury development, leaving young buyers with few realistic options. For many, the only viable path to homeownership in Miami involves making major compromises, buying far from the city center in areas with longer commutes, pooling resources with friends or family to purchase together, or taking on a fixer-upper that requires significant additional investment. Some young Miamians are even choosing to leave the area altogether, moving to more affordable parts of Florida or to entirely different states in search of a chance to own a home. While this can solve the affordability problem, it also means leaving behind the cultural, professional, and family ties that make Miami home. The harsh truth is that in 2025, for the vast majority of young adults in Miami, the housing market is not just unaffordable, it's structurally stacked against them. Decades of underbuilding, the influx of global capital investor dominance, stagnant local wages, crushing insurance costs, and climate risk have combined to create a market where the traditional American dream of buying a starter home in your 20s or early 30s is effectively off the table. Without significant changes in housing policy, wage growth, and the balance between investor and owner, occupant buyers, Miami risks becoming a city where homeownership is a privilege reserved for the wealthy and well-connected, with everyone else left to rent indefinitely in one of the most expensive rental markets in the country. For young people, that means adjusting expectations, exploring creative buying strategies, and perhaps most importantly, having an honest conversation about whether buying in Miami is a realistic goal at all, or whether the smart move is to build wealth elsewhere and return only if and when the market becomes even slightly more forgiving.